What's up guys, Chartsmith here. In this part of the video I will recap the trade you've just watched. Before our trade we just had a unreal move of more than 5% to the downside. I've never seen it happen before, but with this move we took a significant low and made an SMT, which caused for a big V-shaped recovery, signaling for a market maker buy model. But what we do on a higher time frame doesn't mean we can short on lower time frames. So let's look at the price action on the lower time frames, because yeah, the 50-minute chart, as you can see, it doesn't tell us anything on this local picture. But on the 5-minute, we have a really nice bearish gap, which is a point of interest to short, or a point of interest if you inverse it for longs. So it's a relevant gap to put in our charts. As you can see, we come back in this 5-minute fair value gap and we reject it. So maybe we can look for shorts. But that is not the only thing. We take out this high. With this high, we already made a big move to the downside, which means a lot of sellers have put a stop loss above here. So all the sellers from this move are gone, which means we maybe have to take out new liquidity on the lows to take out highs over here. But that's not the only thing that happened. We also left open New York lunch high, which is a significant high to take out because it's a session high. What that tells me is, okay, we take out a nice high with a lot of liquidity because it's a big move to the downside, but we also leave open a significant high, which means we need liquidity from the lows. So I'm going to the lower time frame to see if I can use some gaps for this move to the downside. The first thing I see is this 1-minute fair value gap. When this was made, I wasn't really happy about this one, because if you want to play a gap like this, you have to put your stop loss at least over here. And as you can see, the risk to reward at your take profits is just terrible. So I was just waiting patiently for price action to give me a better entry or a better stop loss placement. As you can see, before we lose this fair value gap, we made a high over here, which caused for more acceleration to the downside instead of making a higher low for the new move to the lunch high eventually. So that also didn't happen and gives me a better stop loss placement. After we lose the fair value gap, I just place a limit order over here. I don't market this gap because it's also a 3-minute fair value gap, and most of the times you will get a retest on bigger time frame gaps like this. Order got hit. My first take profit was at the end of this liquidity trail over here. 1, because it's the end of the liquidity trail, and 2, because it's over to risk to reward. I took my second TP over here because it's the end of all this liquidity from this move, and it's the end of the bigger liquidity trail. And for the last TP, I targeted the AM low, which caused for the trade to hit 4 risk to reward, which is a really nice amount. So if you thought this video was helpful and nice to watch, leave a comment, leave a like, and hit that subscribe button. See you in the next one.